So the concept of jobless expansion right now in the United States economy got me thinking this morning as I was reading an article out of CNN Business that is entitled "An Unusual Trend in the Economy is Worrying the Fed." Let me share the story with you, and I went and dug a little deeper as usual to kind of give put some more meat on the bone. But this is something that's very concerning, and I want to get your thoughts and input. I don't see how it reverses course, okay, at all, unless we have massive, I mean massive, like the mother lode of, stimulus, zero interest rates or negative rates, UBI, whatever, helicopter money to infinity. So let me share the story with you, and then I'll give you my additional thoughts I pull up, and leave your thoughts and comments for me as well. Before I jump in, as I always humbly ask, if you're not subscribed to the channel, please subscribe so we can keep growing the community, and I appreciate all of you for being here. So something in the U.S. economy, it says, isn't adding up. U.S. companies have sharply slowed their hiring this year. The economy lost jobs in June and August, and the average pace of job gains for the 3 months ending in September was only around 62,000 jobs, according to the Labor Department. Yet workers' productivity, a key driver of economic output, remains high. According to this article, you guys may disagree with it. I'm not telling you to accept, nor am I accepting all the premises set forth in this article as true or as gospel, but it definitely leads us to a conclusion which I want to share with you. So it says worker productivity remains high, and gross domestic product, which captures all the goods and services produced in the economy, has stayed robust. A growing economy boosted by, says, resilient consumers, hold that thought, I'm going to share some stuff with you in a second, and massive investment in AI should be spurring hiring, especially now that the Fed has started lowering borrowing costs. It says, but that hasn't happened. So number one, the resilient consumers are only resilient because they're using debt, okay? They're using credit cards, they're using buy now, pay later, they're tapping home equity, okay? But yet they're still spending in the economy. And of course, we know there's massive AI spend going on. So it says something has to give. Either economic growth softens to match a soft labor market, or the labor market has to rebound to match stronger economic growth. But business spending on information processing, equipment, and software accounted for 4.4% of GDP in the second quarter of this year, according to Commerce Department data. Okay, and that's just below the peak reached in 2000. So we have massive spend going into AI and automation. So that leads me to conclude, and again, I'm not an economist, I'm not an expert, I'm just sharing my personal thoughts on this from a layperson perspective, that how is that going to change? When you have massive AI spend going on, you have companies not hiring. So what this says is a jobless expansion could quickly translate into a recession. So GDP rising without wage growth means weak demand. Okay, the economy expands, but wages don't rise. I shared some news with you about a week or two ago. I saw something about real wages are actually falling. They fell between July and August 0.1%. I think they only gained 0.7% on the year. So real wages are falling, or they're flat at best. Okay, so wages aren't rising, hiring is stalled, job openings fall, okay? So then what you have is you have an expansion, right? And I'll tell you in a second why we have an expansion. One is because the consumers are spending money in the economy using debt, okay, and credit, okay? And so you have expansion. The expansion is being driven by supply productivity, not by demand. And that leads to something we call eventually deflation, okay? And I want to explain to you how I don't see this course being reversed by any self-correcting means. So what's fueling this expansion? Number one, we just discussed it. The productivity is spiking because automation, AI. Now, AI is not coming in and taking over millions and millions of jobs yet. It's going to, but it isn't yet. That's not the only thing that's fueling this expansion, but it is definitely a big element, okay? It's automation and artificial intelligence. Number two, government spending, all right? The government spending is carrying the economy a lot right now. We have massive federal outlays, infrastructure, the CHIPS Act, subsidies, defense spending. Obviously, we know about that. So deficit spending accounts for about 1.7 trillion being pushed basically into GDP, which artificially makes it higher than it really should be, okay, on that deficit. Again, deficit spending by the government, deficit debt spending by the consumers. And consumers are spending on credit. I saw an article today that Klarna now, for the holidays, is rolling out a gift card program. So you can actually now using Klarna, buy your family, friends, loved ones gift cards on ForPay. Okay, so you used to go in the store and give the cashier $100 and get an Amazon gift card back. Now you can do this all online, use Klarna as the intermediary, right? And then you can finance the purchase of your gift card for the holidays. Okay, so that is a pretty bad sign. We know what's happening with credit card balances at an all-time high. Buy now, pay later usage is skyrocketing. Delinquencies are rising. People are spending. So the economy looks like it's growing on paper, but they're spending using debt. Okay, so we have short-term demand expanding, but eventually, when the consumers get tapped out, where there's no more buy now, pay laters, there's no more available credit on their lines, there's no more equity to pull from their home if they even own a home, then we have a disaster. Okay, so we don't have a job market now that's participating in this expansion, like I just said. So where does this all go? Okay. You've got a situation where consumer spending accounts still for 70%, about 70% of GDP in this country, all right? But once AI continues to transform and take jobs, the incomes are going to fall more, okay? Demand is going to collapse even more, and that in turn becomes this vicious cycle where business revenue drops, okay? And then we enter into this, like this classic, what you would call a deflationary spiral, right? The doom loop here. So look into this for yourselves and leave your thoughts. AI is basically deflationary in and of itself. It's going to destroy it. It's already destroying, more jobs, or just destroys jobs faster than it creates jobs, okay? So eventually the consumers are going to hit the wall, okay? We see it. We're seeing it now. I shared in a story last week really how bad off things are. Look what happened. Go and do some research. What triggered in the 1930s the whole New Deal? If you guys are students of history, look and see what triggered that and why. Okay, because once you have the consumers collapse, then you're going to have, like I said, corporate earnings collapse. Okay, and then this deflation sets in. And what happens when deflation sets in? Go back and look throughout history. The government has to, like I said, the mother lode of all intervention. Okay, they have to take rates down to zero or negative. They've got to basically go unlimited quantitative easing, direct payments like UBI, stimulus checks. And so they've got to basically create, artificially create demand. So look, that's why I left the thumbnail for the burning dollar. Eventually, the dollar will stay strong, okay? But as the intervention has to happen, because this is not self-correcting, folks. From my perspective, these jobs aren't coming back, okay? The more AI goes on the scene, the more you have real wages falling. The jobs aren't coming back. The companies are not going to hire when they're spending massive money on AI and automation, right? Those are inconsistent with one another, okay? So how is this going to just simply self-correct? You've got some Fed heads out there saying, oh, this will work its way out. I don't see that. I'm not an economist, I'm not an expert, but I just don't see it happening. So you're going to have eventually, what happens with massive intervention? It destroys the purchasing power of the dollar. Okay, so hence the dollar, the little image I have on the thumbnail today. So what do we do? What do we do in closing so I don't go too long today? Knowing this is coming, and maybe you guys disagree with the premise. Maybe you see jobs flying back all of a sudden, and massive job creation in this country, real wages going up, the trillions of dollars of consumer debt that's out there in the system somehow miraculously gets paid off. These consumers, find a way to pay it. I don't see that happening. Okay, so what do you do as this is unfolding? And it won't happen overnight. But it's probably going to happen sooner than most think, unfortunately. I think number one, from a layperson's perspective, you've got to find a way to work for yourself. You've got to find a way to make yourself indispensable for you and your family by whatever it is. And again, people say, oh, you can't just go out and start a new business. There's challenges. You got to think it through. I don't know. Maybe you get whatever the side gigs are. You do 2 or 3 of those. You start building something that, I don't know if that maybe won't require consumers buying a good, because that's going to get hit. I don't know. Is it content creation? You guys let me know what you think. But you also have to be thinking about holding assets that are going to eventually, by the way, I think gold and I think silver, gold, silver, and the big cryptocurrencies, Bitcoin. This is my personal perspective, not telling you what to go buy. It's not trading advice or economic advice. They're going to initially get hit, okay, when the markets start to crack, like they always do, because there's a reach for liquidity so people can make margin calls and do whatever they have to do. But eventually, those assets during a deflationary period will be strong, okay? And so they become the real things. So again, I don't know. That's just my thoughts initially. This doesn't look good, because my whole thought, this is why I wanted to share this concept with you in the article. It's somewhat of a depressing thought process when you go down that road, because I just don't think it has a method to self-correct, given how bad consumers are right now, and given how bad the job market is right now. So I'd love to hear what you guys have to say. If you enjoy the content, leave me a like. If you got a subscribe button for me so we can keep growing. Leave your thoughts. With that being said, I will talk to all of you soon. Bye.